In today's video, I'm going to share with you one of the most important scalping rules I've learned throughout my past 5+ years of trading that helped me become a profitable trader. If it feels like every time you enter in a trade only for you to get immediately stopped out, this video is for you. I'm going to teach you one simple and repeatable rule that you can use to help fix your trading problems and mistakes. So with that being said, let's get right into the video. So in today's video, I'm going to explain to you one of the most important scalping rules that you need to understand as a trader. And this scalping rule has helped me stay away from taking unnecessary losses, and it's helped me to make sure I prioritize on high quality setups. And in today's video, we're going to talk about displacement and why displacement is so important when it comes to scalping. And as you can see here, I've made over $24,000 in a week trading. This is my last week's P&L. And as you can see on this graph here, I ended up making over $24,000. As always, these results aren't typical. I lost for years in the markets until I was able to find a system and proper edge in the markets to have results like this. So let's get right into exactly what is displacement. So displacement is very key when it comes to the break and retest. And what is displacement? So displacement is looking for this leg in price that essentially breaks this swing high. So as you can see, we're in a very clear uptrend here. We're making higher highs, higher lows. And what we want to see is this key leg, right? So once we have this break of structure towards the upside, this leg in price is going to be very key to determine if it's going to be a high probability retest or it's going to be a low probability retest. What we're looking for is a form of displacement or a lack of displacement. And that's going to be key when understanding if price is most likely going to continue higher or if it's ultimately going to fail. So what we're going to do is wait for price to break structure towards the upside. And now what we want to see is this leg in price. So if we have a lot of displacement, then we can be looking for the retest for continuation higher. If there's a lack of displacement, we have to be cautious of this potential retest failing. And how do we determine if there's going to be a lot of displacement or a lack of displacement? And that's exactly what I'm about to talk about in today's video. And then you can see on the right hand side, we have another retest. So you can see price moves higher, break structure towards the upside. But in this case, what we have is a lack of displacement. And you can see ultimately this retest fails and we end up having a reversal in the market. So our job is to determine if it's going to be a high probability break and retest or if it's going to be a low probability break and retest and price can potentially reverse and fail. And one of the ways to determine this is by looking at the displacement inside of the break and retest. So as you can see right here, displacement keeps you from trading inside of the range, right? And focusing strictly on trending markets. So as you can see, what we have is a clear consolidation period / chop. Price is just ranging from swing high all the way down towards your swing low. We do not want to trade inside of the range. When we trade inside the range, it's a lot more difficult. When we trade outside of the range, that's when we're going to be looking for continuation higher. So this leg in price here is going to determine if we're going to have potential continuation. If we have a lot of displacement or breaking above the key level with strong candles with a lot of volume, then we could be looking for the pullback to retest this swing high for a continuation back towards the upside. So this is exactly what displacement is. And I'm going to show you one of the easiest ways you can determine displacement by just using a 3-candle pattern. So as you can see right here, what I have is a 3-candle sequence. This 3-candle sequence is all you need in order to determine if there's going to be a displacement within the break and retest. And I call this the bullish gap or the fair value gap. So what we want to do is mark out the 3 candles. As you can see, what we have is the first candle, the second candle, the third candle. And when we're in a clear uptrend, what we want to do in this case is mark out the high of the first candle and the low of the third candle. And as you can see right here, what we have is this gap. So if there's a gap that forms within the markets, this is what's called our fair value gap or what's called our bullish gap. And whenever price makes this gap in the markets, this is a good sign that price is going to have continuation because this is a form of displacement. There's an imbalance in the market. And when there's an imbalance in the markets, in this case, that means buyers have taken control. And there's a very good chance we have continuation as long as we hold this bullish gap in the market. So what we're going to be looking for is simply, right, continuation above this fair value gap for a continued push towards the upside. So this is the scenario on how the 3-candle sequence is formed. And if the candle wicks are actually touching each other, that means there's no displacement. So let's say, for example, the first candle high is touching the third candle low. Now there is no displacement, right? Because the wicks are now overlapping. Whereas if there's a gap, then there is displacement. So this is one of the easiest ways to determine if there's going to be displacement or a lack of displacement. So now we have our 3-candle sequence towards the downside, and this is what's called our bearish gap or our fair value value gap. And what we're going to do in a downtrend is mark out the first candle low and the third candle high. And as you can see right here, what we have is a gap in the charts. So we can draw this out, and this is what's called our bearish gap. And this is going to be the area that we like to see price respect for continuation towards the downside. So this is a bearish sequence. It's the exact same thing as the bullish one, but opposite. And a similar thing applies. If the wicks are now overlapping, that means there is no fair value gap. But in this case, the wicks are not overlapping, so we have a fair value gap. It doesn't matter what color these candles are. All you have to understand is that it's a 3-candle sequence. And if there's a gap in between the first candle low and the third candle high, then we have an imbalance in the market and we can take advantage of that. So now let's go on to exactly how this will look like within a trending market. So as you can see right here, what I have is the bullish gap slash fair value gap. You can see we're in a clear uptrend. You can see price now breaks above. We're breaking structure above this key pivot high. What do we also form here as well? We actually form what's called a fair value gap. As you can see right here, if I was to mark out from the first candle high to the third candle low, I have what's called a fair value gap or a bullish gap in the chart. Now we're breaking above your key retest level. In this case, this is also your 5-minute range. We also have a fair value gap. Now this is going to be a high probability retest because we have displacement. Once we break structure towards the upside with displacement, that usually indicates a high volume as well. Now this retest is going to be higher probability, right? We're going to wait for a retest where we have strong buyers stepping in, right? Wait for a candle close back above, right? We can look for entries with stops just to break below. And what we can do now is look for continuation back towards high of day and above. And this is exactly what we're looking for in a clear uptrend. We're looking for retest with displacement for continuation higher. And this gives us a lot more higher probability of a trade setup because we have that displacement, right? Once we have that displacement, it's a good signature in price that it's most likely going to have continuation towards the upside. And what does this look like on a chart? As you can see right here, very similar, right? We have that push lower, we create our 5-minute range. Once we have that nice strong push towards the upside, what do we create in this case? We actually create a few fair value gaps. We create one here and we create another one here. This is a good sign that price is having a very strong push higher. When we leave fair value gaps behind, now what are we going to be looking for? We're going to be looking for this fair value gap in specific because it's in combination with our 5-minute range high. So if I was to draw this 5-minute range high, it also has a fair value gap here as well. So this is a very high probability setup. We have your 5-minute range high that we have marked out. We also have this fair value gap here as well. And you can see price fills the fair value gap perfectly, retest, and maintains that 5-minute range high. You can see strong buyers stepping in. And what you want to do is go long after you can see buyers step in, entry. You can have your stop below this wick. And now you could be looking for high of day plus continuation back towards the upside. And this is going to be your exact trading setup for a move higher. And you can see right here, when you have the fair value gap in combination with other confluences, this is going to give you one of the most highest probability setup for continuation higher. Now let's go on to the downside. And you can see in this case, what we have is the bearish gap slash fair value gap. So you can see we're in a clear downtrend in the overall markets. We're now pushing lower, coming back for the retest. What we're going to be looking for is this first candle, right? This first candle of market open. We can draw this out. We also have a fair value gap here as well. So you can see what we're going to mark out is from the candle low to the third candle high, and you can drag out this general area. So we have our opening range candle. We also have our fair value gap here as well. So this is going to be a very high probability area where we like to see price reject from. You can see price gravitates lower, comes back up, sharp rejection. You can look for an entry off of this candle close, stop just to break above, and now you could be looking for targets down in towards low of day and below. And this can be your exact trading thesis, right? Using the one candle along with the fair value gap as well for continuation lower. So this is exactly what it looks like here on a chart. So the fair value gaps that we're going to choose are the ones that are most higher probability, and the ones that have the most highest probability are the ones with multiple confluences. And what does this look like on a chart? As you can see, we have a very nice push towards the downside. What we're going to mark out is now fair value gaps along with up close candles. So you can see price heads lower, right? Fair value gap never quite came back up and towards that level. The next one that we have is going to be this. So we're going to draw this general area, which is an up close candle. We also have a fair value gap. So we can draw this fair value gap, which happens to be, right, also a break and retest level as well. So this is a very high probability area that price can potentially reject off of. So you can mark out the fair value value gap if you like. You can mark out the order block. They're both in combination with one another. So you can actually just mark out this whole general area with the fair value gap with the order block, and you can see price heads lower, comes back up to retest. You can see some weak price action is forming. You can get in on this candle close or the next candle as it's forming, right? Entries can be on this break of this candle, right? Stops can be a break above, and you could be looking for continuation down in towards low of day and below. And this is exactly what it looks like using the fair value gap towards the downside in combination, of course, with other confluences like the order block in this case. And you can see usually a lot of the times these confluences and concepts are in combination with one another. And when you have multiple confluences, that's when it's going to give you the highest probability trading opportunity. So as you can see right here, I'm on the next slide and I have this 1 hour fair value gap here marked out. You can see I have the first candle, second candle, third candle, and we create what's called a fair value gap here on the 1 hour time frame. So price is moving up nicely. What does this look like on a line chart? So as you can see right here, we're pushing up nicely. We create what's called a form of displacement because we're continuing to push higher. Now, this area is our full fair value gap, right? This is what it looks like on a line chart. This is what it looks like on a candle chart. So the next candle that forms here on the 1 hour time frame can tap the top of the fair value gap and can tap into the full fair value gap. But either way, as long as it can maintain above this fair value gap, we can expect price to continue towards the upside. So let's say, for example, price comes all the way back down into this fair value gap and we wick into this fair value gap and we have nice continuation higher. What is this going to look like on a line chart scenario? Basically, what it's going to look like here on the lower time frames is that price is going to dig deeper into this fair value gap, and then we're going to end up having this nice continue push back higher. And essentially, this is what it's going to look like here on the 1 hour chart, and it's going to fill the imbalance and continue higher. Another possible scenario is that if it just taps the top of the fair value gap and continues higher. This is actually the most bullish scenario, is that when it just taps the top and just continues higher towards upside and doesn't close inside this fair value gap. You just want to see a wick inside and then continue higher. So these are the few scenarios that we can be looking for here on the 1 hour time frame. Of course, fair value gaps, whenever you're looking at this on the higher time frames, it's just a form of a break and retest on the lower time frames. So this is why we can always be looking at fair value gaps and looking for imbalances, because price is just always going to go from external liquidity down in towards internal liquidity, and internal liquidity is just fair value gaps and order blocks. So let's go into some more examples that we can be using for these gaps. So the other two possible scenarios that we can use when using the bullish and bearish gap are very important, because if price does not hold the gap, what's going to happen? In this case, what we have is what's called the inverse fair value gap. So this is the exact same example as before, right? We're looking for that clear break, right? We have our fair value gap here as well. We have our 5-minute range. We want to see this level hold for a continuation higher because we have our 5-minute range high, plus we have this fair value gap here as well. But if we don't hold this level, what is going to happen? As you can see, what we have is what's called the inverse fair value gap. And how the inverse fair value gap works is you're going to draw out that fair value gap that's bullish towards the upside, or bullish gap. In this case, price actually inverse this gap. Once we inverse the gap, which means we candle close underneath this gap, this is a good signature in price that potentially we can have a sharp reversal in the markets. So as you can see here, we have that 5-minute range high. We have that fair value gap here as well. We inverse the gap. That now means we break structure most likely towards the downside, and we can expect a potential reversal in the market. So not only is the bullish gap very important for looking for continuation higher, if the bullish gap fails, that's a good indication that price can reverse and go back towards the downside. So this is very key in price and exactly what you want to be looking for. And what does this look like on a chart? So number one thing when looking for reversals, you want to have higher time frame key pivot points, right? This is a reversal trade. So you really want to see it sweep some sort of key liquidity level, being your previous day high, previous day lows, or some sort of higher time frame old high and low. So price comes up to a key resistance level. Now what we're going to have marked out is what? We're going to mark out this bullish gap. So this bullish gap also happens to be our 1-minute range high. So if price ends up right holding this bullish gap, we can expect price to continue higher, or if it can get above our key level, we can expect it to continue higher as well. What happens if we end up inversing this gap? So as you can see right here, key level of resistance, price is now trying to inverse this gap. This is a very strong candle close towards the downside, invalidating this bullish gap. You can see we basically engulfed its previous candle, which is is right here, we engulfed another candle here as well, also invalidating this 1 minute range high, plus this fair value gap as well. This is a good indication now price could potentially gravitate towards the downside, right? Once we inverse this gap. So as you can see, price inverses the gap. This is when you can go look in for a potential short. If you like trading reversals, stop can be a break above the highs, and now you can be looking for continuation towards the downside. So we have our entries, we have our stops at the highs, and now we can be looking for targets towards low of day and below. And this is exactly how we can use the bullish gap for continuation trade higher, or a potential reversal, which is going to be an inverse for a pushback towards the downside. And as you can see, price ends up moving really aggressively back down in towards low of day. So now let's go on to the next example. The next example, which is a reclaim. This is my personal favorite. So the inverse was a reversal trade. The reclaim is still a bullish trade, but now it's just reclaiming back above a key level. So in this case, what we have is a bearish fair value gap. So we still have our 5 minute range marked out, right? You can see we're in a clear uptrend here. We didn't take the first break and retest because we have no displacement. You can see the first candle high was overlapping the third candle low. So in this case, there's no fair value gap here. So what are we going to be looking for, right? If price ends up failing because this is a low probability retest and it creates what's called a bearish gap. So you can see it creates a bearish gap towards the downside. We have our first candle low in our third candle high, and we create what's called a gap, right? Bearish gap towards the downside. So we have a bearish gap towards the downside. We also have our 5 minute range high here as well. If our higher time frame thesis is still bullish, what we're going to be looking for now is really the reclaim back above our 5 minute range high, plus this inversion here, which is this bearish gap. And this is going to be a good confluence because it's reclaiming back above a key level. It's inversing a gap here as well. There's a good signature that price is going to continue back towards the upside. So you can see key levels that we have marked out, this bearish gap. Once we have that reclaim back above, we can be looking for a very similar trading opportunity, right? Entries with a stop just a break below, and we can now be looking for high of day plus continuation back towards the upside. So this is exactly what we can be looking for. This is one of my favorite trades, which is the reclaim trade. If you guys haven't watched my 84% rule, one of my favorite videos that I've ever made. So make sure to check out that video if you want more information and if you want to see the setup more in depth. Now let's go and see exactly what this looks like here. As you can see, what we have is the reclaim. So as you can see, price is in a very clear uptrend and we're pushing towards the upside. We have marked out here your 5 minute range high. What we're going to be doing is looking for the retest off of your 5 minute range high for continuation higher. In this case, we're going to have to wait for extra confirmation just because we don't have any displacement. And you can see price actually breaks lower. So we end up having this nice push higher, but ultimately it breaks underneath. We don't have any displacement. There's no strong buyers that stepped in off this level as well. So now what we're going to be doing is looking for the potential reclaim back above. If we can reclaim back above, this is still very much intact because the higher lows are being built, and you could be looking for a push back up and towards high of day and above. Now let's go on to the next slide. As you can see here, 5 minute range high, bearish gap here as well. So if we reclaim back above both of these levels, there's a very good chance we have continuation all the way back towards high of day and above. And as you can see right here, we have that strong candle close back above this bearish gap along with this 5 minute range high. This is exactly where we can go look in long with our entries right here. Our stops can be at the low of the candle. And now what we could be doing is looking for a 1 to 2 along with high of day back towards the upside. And this is exactly how to use that 84% rule and using that reclaim while using the bearish gap and fair value gap. So this is very key when looking to scalp in the markets, is understanding the bullish and bearish gaps in the markets. Other ways to determine displacement is by using volume, but when you're strictly just looking at a chart, the best way is to see if there's a form of displacement there. So with that being said, now let's go on to examples that I have for us today. So as you can see, I'm on my first example here and I'm on Tesla on the 15-minute time frame. And you can see just based off the higher time frame context, we're fairly bullish. Nice push towards the upside. We're now creating what's called a flat top break. Higher lows are being built, as you can see here on the 15-minute time frame. We're fairly bullish. We're above our previous day highs. We can expect continuation towards the upside here on Tesla. So now let's go on to the lower time frames. As for the levels that we can have marked out, we can mark out our old pivot points. Along with our previous day highs, we can have this marked out here as well. Now let's play out the tape coming to market open. So as you can see right here, within the first 5 minutes of market open, we're having this really strong push towards the upside. Now we can mark out that first 5 minute range high. What we can be looking for now is either the retest of our key pivot point, which is our 432, or now it's going to be the break above our 5 minute range for this continued push towards the upside. So as you can see right here, we have a clear push higher, right? You can see Tesla is now leaving behind a few fair value gaps. So this is a clear sign of displacement and price wants to continue higher. So what we're going to be looking for is really a retest of this 5-minute range for this continued push towards the upside, right? We also have this fair value gap formed here as well. Since Tesla is so bullish, it can retest all the way back down and towards the bottom of this fair value gap, or it could potentially retest the top of the fair value gap and continue higher as well. So what we're going to have marked out is this really just general area that we like to see price hold for continuation towards the upside. So for Tesla, what we can now have marked out is 5-minute range. We can now also mark out this fair value gap here as well, since we're very bullish and we like to see Tesla really respect this level. So as you can see here on Tesla, we're now coming back down into this fair value gap. Also this 5-minute range here as well, along with this 1-minute order block. You can see buyers are stepping in right before. We actually had the 9 EMA here as well, if you watched the last video. So what we can do in this case is look for an entry once we close back above. As you can see right here, this is our candle close. You can see strong candle close, buyers are stepping in. It's a clear sign that we can be going long with a stop at your fair value gap low. And what we can be looking for now is a 1 to 2 fixed reward ratio back towards the upside. So what we can do is now enter, place your stop here, and look for a high of day plus a 1 to 2 risk reward ratio. Now let's play out the tape. And you can see right there on Tesla, we end up having a super solid push towards the upside, right? Using that fair value gap because Tesla was so bullish that all we're looking for is any sort of pullback in towards key levels, which happen to be our 5-minute range high, plus our fair value gap here as well. Buyers are stepping in. We had that confirmation candle. And now you can see, right, price had nice continuation higher, held our key levels, and then we end up pushing all the way back up and towards the upside. So as you can see right here, this is a great example of using the bullish gap in combination with your 5-minute range high. So we're looking at Tesla a few days later here, and you can see we're still fairly bullish here on the higher time frames. If I zoom out, right, higher lows are still maintained. What we like to see is really the reclaim back above 430 for this continued push higher. So that's going to be the key level coming into today. If we can reclaim back above 430, we can see this nice continued push higher. So as you can see, this was the previous example that we talked about, super nice reaction. Now we're looking for the reclaim back above your 430. So let's go into a lower time frames to play out the tape. So as you can see right here on Tesla, coming to market open within the first 5 minutes, we're having this really strong push towards the upside. So we have this really strong push towards the upside here in the overall market, breaking above our key levels that we have marked out, which is our 430 here on the higher time frame. So now what we can have marked out really is going to be our 5-minute range high. And we also have this key pivot level. So we can actually just refine this level. So we can actually draw out this fair value gap in combination with the higher time frame key level, along with our 5-minute range high. We can extend this over now, and this is really going to be our key level that we like to see Tesla maintain for this continued push all the way back towards upside. So we have multiple confluences here. Let's see if we can pull back. As you can see so far, Tesla's pulling back into our key level, right into that 5-minute range high, along with our higher time frame key pivot point. You can see buyers are stepping in on this candle here as well. This is exactly where we can go look long with a stop loss just to break underneath this 132. We could be looking for high of day plus a 1 to 2 back towards the upside. Now we can play out the tape. And as you can see right there on Tesla, we end up having a super solid push right off our higher time frame key level, right off our 5-minute opening range, right off of our order block here as well. That held perfectly. You can see nice continuation all the way back towards the upside. So you can see this was another great example here on Tesla using that 5-minute opening range in combination with that bullish gap here as well. Now, with that being said, let's go on to our next example that we have. So as you can see, we're on my final example here. We're on Tesla once again. We just had this period of consolidation, and now we're having this really strong break towards the upside. So coming into the next day after a really strong break, we're going to be looking for continuation above its previous day highs. So for Tesla, this was actually a higher time frame breakout, plus it had news as well. So the key levels that we can have marked out coming into the next day is going to be this previous day highs. We're also going to mark out our pre-market highs here as well. So we like to see either the break above your pre-market highs or the potential retest of this 369. So now let's go on to the lower time frames. So on the lower time frames here, what we can expect is potential continuation on Tesla. So as you can see here, within the first 10 minutes of market open, we're having a really big push towards the upside here on Tesla. We're above our pre-market highs, we're above our previous day highs. You can see we have really no down close candles whatsoever, right? The key levels that we actually have marked out now is going to be this 5-minute range high, plus our fair value gaps that we have marked out can be this right here. So we can mark out this fair value gap, very small fair value gap, but this is really the general area that we like to see Tesla, right, retest for this continued push higher. So as you can see for Tesla here, it never quite came back down in towards our 5-minute range plus this fair value gap. And now you can see we're having this next big push towards the upside here as well. So the next level that we're going to be looking for Tesla now is really this down close candle in combination with this fair value gap right here. So what we can have marked out is this fair value gap along with this down close candle. And this is going to be the next level in price that we like to see Tesla hold if it wants to remain bullish and continue higher. So as you can see right here, we're having a really big push towards the upside. Price is now coming back down, retesting our down close candle, retesting this bullish gap here as well. Strong buyers are stepping in. This is where we can go look long. Stop loss, just a break below this candle low, and we could be looking for continuation back towards the upside, looking for a 1 to 2 fixed risk reward. Now we can play out the tape. And you can see right there on Tesla, really solid push towards upside. Of course, Tesla has a lot of momentum on this day. And that's exactly when you want to be more aggressive and use these fair value gaps is when we are trending very strongly towards one side. We want to be looking for imbalances, for quick moves higher or any sort of down close candle for this continued push higher. So the best time to use fair value gaps is in a very clear trend where you can expect price to gravitate to one way very quickly. And in this case, Tesla, we had that weekly base breakout. So we're expecting this to move very nicely in one overall direction. So as you can see, that was a great example using the bullish gaps that I talked about in today's video. We have a lot of examples, right? Going over the bullish gap. We also have other scenarios as well, but primarily we're looking for continuation, looking for moves higher. With that being said, I hope you guys did enjoy that video. If you did, appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.